you have ever looked at price thinking that it's trending and then suddenly you find that it has reversed? What if it's market structure that is about the break of structure, the change of character, or you're wondering when price is gonna reverse? So this video might be for you. Be breaking down market structure the smart money way. This is part 1 of the market structure series that I have started today, and don't miss out on the next series of market structure. The concepts I'm gonna be talking about in this same video are the same concepts that I use in our weekly live sessions every Saturday, so you also don't miss out on our Saturday live sessions. And if you haven't joined our WhatsApp group where we are matching to forex trading discussions and many others, you could join now. And I'm gonna leave a free PDF for those who are watching this video to the end. And with all that being said, let's dive deep into it. And so market structure is just the pattern of price swings and understanding. So what I mean by that is like it's just a series of higher highs, higher lows, or lower highs, lower lows, and so these higher highs and higher lows help us to determine the trend direction. This brings us to the 3 phases of market structure, which involve the uptrend, there is downtrend, plus a consolidation stage. And so in the uptrend, that's where we find stuff like the higher high, higher lows, higher highs, higher lows, higher high. So this confirms the uptrend. Yeah, and you see higher highs, higher lows, higher highs, higher lows. When you see that, you just know that we are in an uptrend. And downtrend consists of a series of lower lows, lower highs, lower lows, lower highs, lower lows. So that's the downtrend. And there is also consolidation. So the consolidation will not show any clear pattern. It's not good to trade choppy markets. It's better you wait for a clear break of any sides, either high or low. And this brings us to the break of structure and the change of character. I'm sure you have ever seen somewhere something like break of structure, where you see people, traders writing boss choke. So that's a break of structure, a change of character. I'm very sure I've ever seen it somewhere. And break of structure happens when price breaks prior the next swing point. What I mean is like break of structure happens when we break past the next swing point and in the same direction. Yeah, and the change of character happens when the change of character is just an early indication that price is gonna make a reversal. Price might make a reversal. So an example of both is when I show you when price is moving, let me say in an uptrend like this, you see making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And so when it breaks past the swing point like this higher high you see here, it forms the break of structure. When it breaks past the swing point, it forms another break of structure. Yeah, that's break of structure. And then when we come to the change of character example is, let me say, if we have a case in point, price was making higher highs and higher lows, higher highs and higher lows. So when it breaks below this previous higher high, this is an early indication that there might be a reverse. And so if we are making higher highs, higher lows, higher highs, and then price breaks below the previous higher low, this is a clear indication that there might be a reversal. So that's break of structure and change of character. So I'm sure you'll never be confused again when you see choke, boss. And when we are marking market structure, we make sure that we are using the higher time frames for trend determination, and then for precise entries and confirmation, that's when we come to lower time frames. So, and the reason we do that is that when we use the higher time frames to determine our trend direction, it helps us to eliminate noise from the lower time frames. And so The reason we use lower time frames for entries and confirmations is that structures happen earlier in the lower time frames than in the higher time frames. This is due to the fractal nature of the markets. Just from this swing low to swing high, there are series of lower time frame swing highs and swing lows. Case in point, we shall have. So a change of character will first occur in the lower time frame before it occurs in the higher time frames, and so if you have an example of this being our higher time frame, like the 4-hour maybe, and so for that case, if our lower time frame is the 15 minutes, we shall have a series of lower lows, lower highs, lower lows, lower lows. So it's better we follow the higher time frame trend. For this case, it will be the bearish. So for this case, it will be bearish, and being bearish, it means that we shall wait for entries from this point. So we shall use lower time frame confirmations. Shifting structure of the lower time frames will mean that we shall make some entries somewhere like here. So that's it. When marking my structure, we make sure that if, let me say, we are using a trend line, we make sure that we draw our trend line. For the case of an uptrend, we shall have our trend line touching the higher lows. Our trend line will be touching these higher lows. So for the case of an uptrend, and for the case of downtrend, we shall have our trend line touching the higher low, the lower highs. So, and I'm sure you're wondering, how do we actually get these points of interest, or where price is expected to react from? Inside these, when we have inside these swing points, let me say from the this swing low, previous swing low to the next swing high, the next swing high, inside this area here inside this area between the previous swing low to the next swing high, we expect to have our order blocks inside this zone here. We find there an area where price moved so aggressively, or you will see a candle of the opposite color to where price is moving. Let me say, if you are bullish, as we see here, you will see somewhere that there were some red candles, and then price moved aggressively with a green candle. That will be meaning that from that area, institutions were entered the market, and so it's what we call an order block. So as price moves beyond this area, as price breaks here, we shall mark our order block from some point here. That's where we shall wait price to retest, and then we wait for confirmations in the lower time frames, and then that's where we shall get our entry from. Let me show an example. So if price broke above this previous swing high, you see here, this previous swing high, so we shall make sure that we examine this area from this swing low to the next swing high. Let me say the next swing high to the next swing high. Let me say this area here. So we shall make sure that we examine this area to find all the order blocks that could be in that, so that the order block that could be in that area. And when we find that order block, is what we mark. So it's that order block that we mark, and where we shall wait price to retest, and then we
and then from that point we will be executing, and so we shall wait for price to retest. Then we have confirmation. We move ahead and clear confirmations to that. And there is a category called the market movers, and what they do, they make sure that they stop out the stop losses of retailers such that they collect enough liquidity for the markets to move. So you make sure that you're not hunted by these market makers. And they use various techniques, like they do liquidity graphs whereby they stop out retailers stop losses where they expect them to pull their stop losses. So liquidity, for a set of liquidity concepts, that's something I'll break down in our next video. So the other thing they do is they make fake breaks of structure and changes of character. So they make fake boss and fake chokes. So how do I identify a fake break of structure? Make sure that price clearly breaks the previous high or low. If you consider this case when price was trending lower, so price was making lower lows, lower highs, lower lows, lower highs, lower lows, and so why would I consider this to be a fake break of structure? This one here is a fake break of structure. Why? Even fake breaks of structure, they don't clearly break. They make something. Even they break with wicks, as you see this one here. Price broke with just swing point with just a wick, indicating that this is an invalid break of structure. So you watch out. So this is an example of an invalid change of character that I will show you here. As price was trending lower, it indicated break of previous lower high, but it broke with a wick. You could see, you could realize this. It broke with a wick, indicating that this might be an invalid, and this might be an invalid change of character. So what did price do then? It then came, so there could be some traders trying to enter from this point, but it will be stopped out. Their stop losses will be stopped out by price moving lower to this point here, you see. So make sure that you avoid such traps by these market makers. This is an example of a real break of structure. So these are two breaks of structure whereby, as you see, price clearly broke the previous swing high. This swing high you see here, price broke it clearly, and so it came and tested our order block. You see here, this is an order block. This is the order block that we managed to use at this point. This one you see here, and then we tested our order block. That this is the order block that we used, and so we continued higher and higher. So this is also a valid break of structure, as price broke clearly our previous swing high. And for the change of character, we shall have an example where price was trending lower, as you see, lower high, lower low, lower high, lower low, lower high, lower low. So price, this is the valid lower high, that when price broke this lower high and broke above clearly, this indicated that we had changed our character. Why are we not considering this to be the valid change of character? The reason is they didn't form new swing lows. So this is the swing low that was formed previously, because it broke below the previous lower low. So breaking below the previous lower low means that this is the new swing low that we have, and a break above this swing high, this lower high that formed this lower high, indicates that we have changed our trend. So
we needed a retest in this other block that you see here. This is the block that we used at this point. We got a block here. So our price selected from, indicating that this is our change of character that we used for that case. And then when price we tested, so it was so clear that we had changed trend upwards. So we started making new higher highs and higher lows. So here we shall be having a breakout structure at this point, indicating that now we are trending upwards. As promised earlier, if you watched till this point, you check link in the description to download our free market structure PDF that we made for part 1 of this video, and don't miss out for part 2. If you haven't subscribed to our YouTube channel, you could subscribe not to miss the weekly live analysis sessions. And as always, we're on this journey to success together, and I'm cheering for you guys every step of the way.